So tons of news to come, guys. Absolutely tons. Now, I've just done an enormous stream, but I'm going to cover the S&P 500 E-mini futures, or the ticker ES1 exclamation mark, in a little bit more detail. And I apologise about my voice being a little bit raspy. If you do want to get on board myself, of course, go under this video and you can learn lots of things like we're coming now. So you can see on your S&P E-mini futures that we come sideways for a long while, okay? And things really aren't blowing out the water either way. You know, you've got nothing to the up or nothing to the down side, and that has allowed you to drop your size and trade in and out of the market. Now, the top part of this channel, if you like, is coinciding with your 100 MA, but that's not particularly what's significant here. What is most significant is if you look back and you check for PA levels that are going to be the next place that price runs into if you do break out of that channel that we just spoke about. And it's the same to the downside. If you're going to come about the downside of the channel or the upside of the channel, you're going to want to be trading in the right way. You're going to be wanting to know where is price likely to stop again, because those price action levels that are existing outside those channels are going to greatly determine really where you're going to be looking to get long or get short if the price does break out of those areas or move out of those areas. Now, we're not looking to guess, will the price break out of the upside or will it break out of the downside? It doesn't matter to us. We're just looking to trade the move once that occurs, okay? Once you do break out of that level, what is going to get hit and what is going to cause a rebound? Now, if I label these key price action areas where you've got those candle wicks, that gives us the first start to forming our bias of where that area is going to be. Now, once we've determined that, okay, and you can see, you know, you've got candle wicks here, price action levels there. Once you've actually determined where that price that is going to be likely to form rejection is, you can take the next step, which is determining your risk. Now, given that you've hit on both these levels or around these levels several times, it's a good idea to proportion your risk to that that inherent risk, if you like. So, you know, if you've hit on a certain level to the downside, for example, you probably won't be trading the same size as you were before. Now, as well as that, you need to trade in proportion to your overall equity. So if you're holding a slight loss because you took it long before and it's come down, okay, then it's a good idea to be wary on any longs that you add into the market. But the news today, we may see an impulse move up or down out specifically of this sideways movement. That would be very ideal because it would allow us as traders to get a better price effectively. That's what we're looking to do, because the price at the moment is not as ideal. Now, you can see that we are coming to the top of the price channel. However, the fall away from it a minute ago, or not long ago, last week, was very small. Okay, there's not a lot of push to the upside, and the news at the moment isn't smacking us higher yet. Now, I'm not going to sit here and guess that the news is going to pull the market up here. I'm not going to guess that the news is going to pull the market down here. I'm simply going to watch, wait, and observe, because that's all I can do. And as price raises to those key levels, okay, you've got 4,200 up here, and around those levels, you know, we can then look, okay, for the same thing. If it does break up above that, where am I going to short after that? And it becomes a process of identifying at any time where there's market value or where there's price action, and then scaling your risk accordingly. So I'm fully prepared for price to go up to 4,500, just as I'm prepared for it to go to 4,230 area as well. Okay, and it's the same to the downside. I'm prepared for it to come down here, just as I'm prepared for it to come down to here. Okay, now dropping onto lower time frames just quickly. If you go to the daily, again, you can see a lot more. There's a mixture of MAs there, but still my bias is coming down to the bottom side of that sideways movement, because I can see on the daily as well, there's various candle wicks where traders have previously got long. So, of course, I want to use my bias to say, okay, well, that's where I would like it long as well. And you can see the market is tentatively moving up, because if you draw a line like this, It's flat, but it is moving up to the side. So I wouldn't be surprised if you do get that 4230 move, especially with news. But don't guess the news. Wait till it happens. Make your decision. Scale in with risk management, and you'll make a better decision. Thanks for watching, guys. See you in the next one.